answer some investing questions first.
Okay.
Alright. So do you have some questions on your end?
Yeah, I think before that, maybe while we are talking, like I see Brian, hi, CJY. I mean, thanks for joining us. Right, we'll make sure that we'll do everything in our power to make sure that your time is worth. I bet you guys are actually sacrificing your lunch. So I actually prepared some really good content for you guys, and I think Daryl as well. So while we are answering these questions that were sent in advance, you guys can actually start typing in questions. We'll actually read the chat. So don't be shy because this is your, I mean, since you have spent time, you know, just write it down, right? So that you'll make your session fruitful.
Okay. Hello, Jinao.
Yeah, hi Junhao. And WJTO also. Okay, so I think one of the first questions that I got was like, how do you start investing? So I'm not sure if it resonates with you guys in the listeners here. So if it resonates with you, just type yes, you know, if you want to learn how to start investing. So I think for me, right, the number one thing for anyone, right, who knows nothing, who knows nuts about investing, number one thing is you have to set up your brokerage account, because no matter how much knowledge you have, but if you don't have a brokerage account, it's just like knowing how to shoot, but you don't have a gun. You got to buy a gun first, then you shoot, right? So I personally use, I would think for a starter, you should use FSM1. So it's by iFast, and they charge one of the lowest brokerage fees. And you might be thinking, you know, okay, after I get a brokerage account, what do I buy, right? That's the number one question for most people. And, you know, it can be very, very fearful to click the first button, because that's exactly how I felt, right? Because I don't know if I click already, will I lose money or will I make money? Or, you know, after I bought my first stock, I check my stock every single day, right? Like as if it will help, you know, look at your stock will not make the stock price go up or down. So I mean, it's psychological, but I would say the number one thing that you should consider is the S&P 500. So the S&P 500 contains a basket of the top 500 companies in the US. And when you just buy one stock of the S&P 500, you're actually buying the top 500 companies in the US. We're talking about Facebook, Google, Apple, so on and so forth. So immediately you're diversified and you're buying to the entire US economy. And I would say, you know, even if you lose money in the short run, it's totally fine, because as long as the US economy doesn't collapse, doesn't go bankrupt, all right, you are perfectly fine. And history has shown that since the 1900 all the way till now, right, for 100 years, if you invested in the S&P 500, every single year, you'll be getting a percentage of about 7 to 9%, right? So, you know, that's better than your bank. Your banks are probably giving you like 1%. So you can actually make a lot of money compounding 7 to 9%. I think within 30 years, you can make $1 million if you save enough money, and so on and so forth. Yeah. Right. So that's one common thing that I'll tell people. If you are really still unsure, you can just obviously DM me or Daryl. Daryl is a hugely competent investor after he has learned it. Yeah. Yeah.
Definitely. Yeah. After I've been to gym, equipped with the basic fundamentals, and along with his guidance, you will definitely know. I mean, like, at least for me, at least, you know, I know sufficient enough for me to put my money. And but at the end of the day, I think a lot of people have been asking, now it's red, are you worried? The US economy, how is it like? You know, even for myself, right? My stocks are in the US, it's red. But truth is, I personally not as worried or afraid. Like, I know I see value in the company that I invested. So I just want to get your insights about that.
Right. I think a lot of people, they are so worried about stock prices, right? I mean, you look at the media, oh my God, is this going to be the next crash? It's gone up by 7%, 8%. So I always like to tell people, right, why people are feeling that way, because they treat the stock market like a game, right? You treat it like a gambling game, a betting game, where, you know, you buy into a stock, you don't even know what you're buying. So essentially, right, when you buy into a stock, you're actually a legitimate and legal owner of a business, right? So for example, if I buy Apple, I'm actually buying the real Apple business. So when you go down to the Apple store, you know, you see customers coming in, right? You're actually a business owner of that, of Apple. And that's the beauty of the stock market, right? Because previously, if you wanted to buy over Apple, you probably need like billions of dollars. But
Right.
now because of the stock market, with just $100, you get to participate in the prosperity of $100 billion company, right? So as long as Apple keeps increasing its earnings, you can actually be very well rewarded. Right? But there's one thing, right? The stock market is like a voting machine in the short run. So people will buy or sell based on how they feel about the company. And we all know that we are all creatures of emotions, and emotions sometimes are not logical. It's not rational. So sometimes when, for example, there's a scandal, there's bad news, there's, for example, the coronavirus, people just fear and they start selling their stocks. So, for example, Daryl and I actually own this school in China, and you own it, right, Daryl? If I'm not wrong.
I'm
Do you
looking at it,
invest?
but I have not
Oh, you're
put
looking at it, yeah. So basically, I invested in a school in China, and I just asked myself, right? Let's say you have this coronavirus, you have this trade war, you have all these things that are going on in the world, and does that stop people from buying? Sorry, does it stop parents from sending their kids to school? Right. So if the answer is no, then my real business earnings will not be affected. So why do I get affected by the stock price? Right. In fact, imagine this, right? If you are the business owner of Facebook, right? You're Mark Zuckerberg. And early on, when you're starting your business, someone tells you that, hey, your business is actually kind of a startup. I don't think it's worth even $10 million. Why not I offer you $1 million? Do you want to sell your company? Right? Obviously, how will you guys react? Just type in the comments below. Let's say if you're Mark Zuckerberg, right? While you're building Facebook early on, and someone say, your business doesn't seem to be, catching traction. You're only having college kids coming into your platform. Right? I don't even think it's a $10 million business. Right? I'm going to pay you $1 million. Right? How would you feel? Right? Just type in the comment section below. Okay. Hi, Jangtheinvestor. Hi, Janice. Thanks for joining us. Right? And I see MSN Nicolette joining. Thank you for joining us. Right. So, obviously, your number one response will be to, diss the person off, right? Like, I wouldn't even sell, right? Why would you want to sell a company for $1 million when it's worth so much more? So that's the stock market, right? The stock market will tell you how much your business is worth, but as long as you know that your company is earning more and more money, then, why are you affected by the noise? So for me, I've been sleeping very, very soundly because I know that my businesses will not be affected by the news, right? My businesses are continue earning money. My teachers are continue working for me. I also own JD.com. So it's an e-commerce. I know the employees of JD.com are still working for me every single day, despite having bad news of fears of the market crashing or not. My business is still running and it's still going to earn money. So, I'm not very afraid of the stock market. And that's the number one mindset shift that anyone who wants to invest should have, right? You're buying a business. You're not buying into something that's just a game, and you're not gambling, actually.
True. Yeah. So I think one thing that I took away from that, right, is that the beauty of stock market, you said this, because of the stock market, you get to participate in the prosperity of the business. So that brings us to another question, right, asked by one of them. How much is enough to begin investing?
Oh, that's a super good question.
Yeah, because that's something that a lot of people have been asking as well, right?
Yeah, I always like to give people the analogy, right? Like when you run a marathon, the number one thing you got to do is to first take a step first, right? Every marathon starts with one step. And just like investing, right? I always tell people you only need to have $100 to get started. And a lot of people are shocked. How can $100 make me rich? How can $100 make me rich? The thing is, it doesn't, but it gets you started. And you have to start somewhere, right? If you keep thinking that you need $100,000, you need $200,000 to get started, then you'll never get started, because by the time you hit $100,000, by the time you hit $100,000, then you'll feel that maybe I need more, maybe I need $150,000. When you hit $150,000, you feel like, hey, I don't know how to invest. How should I start investing? You give yourself a lot of excuses, but the best thing for you to do anything, not just investing, to do anything in life, is to just immerse your entire body into the thing that you want to learn how to do, right? And I have a lot of friends in university who started with $500. That was 2 years ago, and most of them in this WhatsApp group that I created. So basically, whoever learned from me when I was in my university days, and they took action, I added them into this WhatsApp group, and I can easily say that in this WhatsApp group, the amount of value in their account right now is definitely more than $5,000. So you talk about someone starting at $500 now, it's more than $5,000. I think that is a really great accomplishment within 2 years. Yeah. So, just get started. And I think the number one thing is that, people think that you have to buy a lot of stocks, right? So in a US company, you can just buy only one stock, like literally one stock. So if you talk about, I think a lot of companies, they are all less than $500 per stock. So you can really just buy one stock to get started. And I think the beauty is when you start making money, right? That's where when you realize that this thing works, just by clicking a button, I don't have to do anything. I let the CEOs work for me. I let the employees work for me, and it's just so passive, right? Then you have this epiphany moment. I can't explain it to you. You have to experience it yourself. You have to click the button. You have to make your first $1 from the stock market. Then you realize that, wow, this shit actually works. And, you will get even more into it.
The passion that you have towards investing is so contagious. Seriously, I think all our audience can feel it as well. I think they might be slightly overwhelmed because you have been in this space for the longest time. I think something that I can share as well as a person who's very new into investing.
Yeah.
For me, it was I was doing sales for the longest time. I was stashing money. I was from the startup scene, doing sales startup. Commission was good, making money. And the reason why I went to find Jang was because I have been working actively for money. There must be something wrong there. I don't think rich people do this. That you have to let your money grow for you or make money on its own. So I was asking who or where can I go and learn from. And here's
Thanks
the danger.
Thanks for that.
Here's the danger because, to be honest, at that point of time, I was stashing at least 5 figures already. And it was a low 5 figure. But think about it. I mean, I made a lot of mistakes with that amount. What if at that point of time, I just play with 100 or 200 to learn that principle of not being greedy, of really like what you taught me, trenches, of not putting everything in one company per se, but like multiple, 2 or 3. So the reason to answer why I'm not in the school that you mentioned, the China school, was because I put too much egg in one basket, and that's something I'm learning as well.
Right.
So I'm hoping that during this period of time, stash more income and put into the other options lah.
Yeah.
So here from me, I'm a newcomer. I'm a newbie, just like you guys who are not experienced in investing. Learn with a small amount first, so that it's less painful.
Yeah, I mean, if you lose 10% on $500, it's better than losing 10% on $100,000.
100%.
So that's the number one thing about starting small, right? You start small, you lose more, and you learn You learn from mistakes at a cheaper cost, rather than you start at like 50 years old. When you lose big, and it's going to be very, very devastating.
Yes, 100%. And another question, right, that I gotten from one of the audience would be, what's your take on robo-advisory or like robo-investing?
Right. For the longest time, right, I've met a lot of people who just what I call outsource their money to maybe someone. For example, like I'm sure you guys probably you have some friends who tell you, hey, I want to manage money for you. I can do this kind of returns. And most of the time, I would say 90% of the time, things will go bad. Things will go bad. Yeah, things will go bad. Either halfway, the friend says that something went wrong, I lost money, or like maybe the robo advisor will come back and say, so and so's account, you have lost money, and that's just because there's market risk. And I find it just very, for myself, I don't know for others, but just for myself, I find it very unacceptable. Like, I just can't take it when, if I lose money, right, I don't know why I lost money. And, if I just get some general answer like, because of market risk, or like, because of this, because of that, and you don't really understand the reason why you lose money, I just feel that is something that's unacceptable. Because for me, right, back then I worked really hard for my money, and I believe most of you actually work really hard for your money. Right? Let's say you work at a job, you're probably paid $20 or $30 an hour. So imagine if you lose $3,000, that's 100 hours of your life that's gone. I look at my money as my time, right? For example, like when I buy food, I'm actually saying, that's like how many minutes of my life gone just to purchase the food. And that's how how it's easy for me to actually delay gratification, right? Because I just think of the number of days or hours or years that I'm actually missing out on my financial freedom. So, when people tell me that, if I let people manage money, people tell me I lose money for certain reason which I don't understand, I find it very hard to accept. And specifically for robo-advisors, right, even more so that I feel that, people shouldn't just hop in the bandwagon, right? Because you really don't know what that robo-advisor is doing with your money, right? They can be doing stupid things like, buying certain funds, which you don't even know how the fund works. They can be investing in, for example, like Europe or like certain countries that are not politically stable. You also won't know, right? Or investing in Jang bonds. And, for those who probably are not so well financially savvy, right? They could be investing in companies like Influx, which have really high, which are bonds that give really high percentage. But actually, it actually didn't go well because the company went bankrupt. Right? So you really won't know all these kind of things. What's the decision factor? And most of the time, trust me, I think even these people who are creating the robo advisors, like they probably don't even know if their strategy will work or not. Yeah, seriously. So I always take advice from the world's richest number one guru, right? I don't take advice from people who are just who haven't seen success. So world's richest number one investor, Warren Buffett, he has said that if you know nothing, the best you can do for yourself is to invest in S&P 500, right? And the ticker for the S&P 500 is actually this thing called VOO. So basically, when you buy one stock of VOO, you're actually buying top 500 companies in the US. And the number one thing about ETFs is that you can never lose all your money unless the US economy goes bankrupt. So this is how it works, right? So let's say this year, the top 500 companies are in this basket. And let's say the 500th company goes bankrupt. So what will happen is the 501st company will get promoted into the 500th company. So, your ETF, your S&P 500 will never go to zero unless all the companies in the US goes bankrupt. And if that happens, seriously, like nothing will be worth anything at all. So you don't have to worry about that worst case scenario, right? So, just buy the S&P 500. And okay, the funny thing is for sometimes, right, even for these robots, right, they actually buy the S&P 500 for you, but they charge you a premium,
A fee for it.
Yeah, so, I don't understand, and sometimes, there could be insurance advisors here. No offense, right? But let's just be transparent here. Sometimes when you buy into the S&P 500 through your insurance means, they actually charge you a higher management fee, or they charge you a sales fee. But you could have just, bought it yourself by just opening a brokerage account and just click the buy button yourself, and it's much more cheaper. Yeah, so these are the things that I've always been strongly advocating for folks who are in their life where they just don't have a lot of money, or they don't have a lot of time, right? They want to focus on generating cash first, and they don't want to think so much about investing. The thing they can do for yourself is to just do dollar cost averaging on the S&P 500. That's the super most no-brainer way.
I think to sum up whatever you just said, right, thank you for sharing as well. I think that's the number one thing that I learned, right, was that must have ownership, knowledge, and responsibility in your money.
Yeah,
like,
no
like
one
really,
exactly. No one is more interested in your money than yourself.
True.
Yeah, no one will tell you that. Seriously.
True.
No one is more interested in money than yourself.
Just now you mentioned about S&P 500, right? I got one interesting question that came in.
Okay.
Is it better to do a monthly purchase, which is like the dollar cost averaging concept?
Yeah.
Or a quarterly? Which would you recommend?
I would say it depends on your personal life, right? So for example, like maybe you're in the sales job, and maybe every quarter then you get paid out your bonus, then do it quarterly. So I think end of the day, right, you have to be comfortable that the money that you put aside to invest, right, is money that you don't need for the next 2 or 3 years, right? Because the number one reason why most investors fail, right, is because they don't have holding power. Right. So the thing about succeeding in investing is you must hold things for the long term. And when I talk about long term, right, I'm not talking about 1 year or 2 years, because nowadays, we want that instant gratification so fast that, even long term is just 1 year. When I talk about long term, I talk about 10 years, 15 years, that long. And so as long as you have that holding power to last for that 10, 15 years, you are sure to make money. as long as inflation keeps happening. Why do I say so? Because when there's inflation, right, companies can charge higher prices for their goods and services, right? And when they charge higher, they earn more money. And when they earn more money, they become more valuable. And that's why over the long term, companies in the US, they actually appreciate in value, and that's why the stock prices also appreciate in value. So there's actually a reason why the S&P 500 keeps going up and up, right? It's not like, how would I say? It's not like a gambling game, or it's not like speculation or what. But actually, there's a real legit reason why the S&P 500 keeps going up and up, right? So a lot of people ask, why does the S&P 500 version of Singapore not go up, right? We call it the Straits Times Index. Actually, it's very simple, because the top 50 or top 100 companies in Singapore, they are not growing at the rates in which your US companies are growing at, right? And if you think about it, it's quite logical, right? Because the Singapore market is very small, right? One state alone is like 50 times bigger than Singapore in the US. And the US has so many states. The market is so big there. So companies in the US, so if you're the best in the US, right, you're actually the best in the world. But if you're best in Singapore, you may not necessarily be the best in the world. Yeah, so that's why, your Straits Times Index or STI might not be, doing so well. So end of the day, a lot of fund managers, right, we talk about these people who have CFAs, they have PhDs, they study a lot, they're probably smarter than you and I, but they still can't beat the S&P 500. So, if you really want to find a way to, in a no-brainer way, invest, right? Just invest in the S&P 500 through the ticker symbol which I typed, VOO. Yeah.
Yep.
By the way, by the way, thanks for joining us, Green, ZAO, Ben, Kim. So if you guys have any questions, you can just type in. So we're talking about money, talking about self-awareness, talking about how to do sales, right? So you have someone, so it doesn't have to be just talking about investing all the time. If you want to talk about how to generate cash flows. So I think that's the number one question, right? Which I think Daryl, I think I have a question for you, and this some of the questions that I got from my side as well. John, I understand that I can start with $500 only, but if I want to be rich, right, I have to put in more every single month, and that's very, very true. So, how can I, and a lot of people understand that sales is definitely one way where you can really generate cash flows quickly, right? Not overnight, obviously, but quickly and sustainably, and you can be very wealthy through sales. So, what is one way one person who knows nothing about it can get started, or what's one industry in which one can get started? Maybe Derek can share more on this because you're the expert in this.
One industry, is it?
Yeah, one industry or one way that one person can quickly generate cash flows to get started, to have a power of sum of money to invest.
Okay, for myself, right, I'm 25 this year. I started when I was 18, 19, 20, building small businesses. Last night during my IG live, I was just sharing this. This was one of my third or fourth business that I created.
Nice.
Literally, it's an IKEA frame. You go to this, you use Canva. You really just use Canva. Use your, for me, right? I said, I will help you print your favorite photo with your favorite quote in a nice frame, and I send it to your doorstep.
Wow.
And the price of this also, I was selling $15, cost price only $2. And that's how I flipped another $13, right? So essentially, how to make an extra income is just by asking yourself, what can I create or what can I produce, right? And by the way, this is a cash upfront business. They bank transfer me already.
Wow, even better.
Then I go and solve all these problems, And of course, this is just one of the products. So I have a huge ass frame, same concept, print your favorite quotes, favorite photo. So I think in a nutshell, the essence is how can you look at this actually came from a problem whereby I wanted to motivate my father and have something that both of us, like a common quote that we believe in. When the going gets tough, we're going, and boom, I was like, what if someone else might need it?
Right.
So ask yourself on a day-to-day basis, what is a problem that you face that doesn't require so much capital upfront, at the same time, if possible, cash upfront. So that's how I did it and really try to be resourceful. Could it be that a friend have a certain asset, that you can actually repurpose or reutilize and sell it to someone, and it's a win-win deal for everybody.
Yeah.
Just as example, right? For example, today, let's just talk about today, KBB.
Yeah.
I believe some of you will know about it. So the cost is actually $2,000.
Yeah.
What if you to speak with everybody, it's only $500?
Yeah.
But if let's say you think it on an entrepreneur level, you buy it at 2,000 USD, and you repurpose it by selling to 100 people at $500 each.
Yeah.
Like that, boom, just boom, you got money, because the value to that customer is actually worth 2,000, but the price they pay is only $500, and you can you can sell it multiple times. So these are just ideas of how I personally generate income, not just sales wise. You get it, right?
Yeah.
So start from something very small, and slowly as you, I'll say, ascend, you will learn new stuff. You will learn how to make $20, $30, $40, and $50 and whatnot. And with regards to sales, I'll say any sales job that comes your way, pick it up first. Like really just pick it up. I started as an intern. I put myself so hard to the manager, you know. I told him, I've created so many side hustles, I can make money, I'm very driven. Guess what? First month I signed nothing. So it was very awkward, and I humbled myself and I said, hey, teach me. So he taught me the basic stuff, and it got me like a first I'll say, got me to the first level.
Right.
That's why I started asking my clients how to sell, and slowly improve. The more you work on your craft, the better you get. And for people who are new, that's where I create this thing called the SEA, Sales Excellence Academy. I teach people sales basic stuff to accelerate your learning curve, so that wherever job you are in, I believe the knowledge or the essence of sales is just the same. Yep.
So, wow, I mean, seriously, so find a way that you have zero risk, you receive cash first, you have no inventory risk, right? So you won't have any 1,000 stocks or something that you can't sell at home, right? Don't take up the inventory risk, and find a problem that a lot of people are facing right now and try to solve it, right? And you don't even need to sell, right? Because they feel so much pain that when you give them a solution, they are more than happy to pay it.
One thing.
Yeah.
I tell you, carousel is my favorite spot, carousel.
Oh,
especially
why?
if you can run carousel ads.
Yeah.
Everybody assume, right, that it's a place for people to buy, sell second-hand goods. But I make at least a decent amount of money there because, like for example, I imported Korean pants. I just share with you guys. So there's this box here. I call it the Doraemon box. So all my goods that I buy from Korea, Japan, or whatever bullshit, I just stash it there. And I have those polymailer that I'll send out to customers. The thing here is that all you have to do, right, is literally just buy some stuff that nobody knows, that has high perceived value, and sell it on carousel.
Yeah.
Yeah, you don't need to create a website, you don't need to run advertisement, marketing, and whatnot. Carousel on its own is really powerful.
Yeah.
But you know how to use good keywords, searchable content, a problem that they already face. Like I to be frank, last time I bought a Korean pants was what, $12.50 USD.
Yeah.
Let's just say about 15 Sing dollar. Perceived value from a Uniqlo, a Korean pants, okay, it's like a smart pants. Perceived value at least 50 Sing dollar, bare minimally.
Yeah.
And I was selling for 35. So that was like $20 profit.
Huge margins.
And exactly, it's decent. It's decent for a start. So back then, I didn't believe in investing because I was like, why do I put $15 and let it grow there when I can flip it like that? You get it? Last time.
Yeah.
But
and it makes sense.
When you talk about 20K, 30K, you cannot flip this way. Yeah. So that's my concept. Small money, I will think of ways to flip it to stash big money, and I throw it to the market.
Right.
Yeah. So hopefully, you guys can learn a thing or two from the way I do. Might not be the best way, but just my sharing.
Okay. I think I see this comment by Hi HUIC. So you're asking VO must manually buy, right? Can't use direct credit in FSM. I'm not very sure what you mean by direct credit. If you're talking about money that you have actually funded into FSM1, you actually have to buy it manually. It's actually like, it works like a stock. So when you buy the stock, you're actually immediately diversified. You're buying into like the top 500 companies in the US. All right. And, I just have another avenue, right? So for people who are, you are really very shy, like you feel that you're not a sales guy, and you're more like an intellectual kind, you're more like a geeky kind, like me, I was actually a very geeky person. What I do is I actually take part in a lot of competitions in university. So I think I see quite like a lot of like a young crowd right here from their side. So, or even in my polytechnic, you don't even have to be in a university to take part in these competitions. So these competitions are actually called like hackathons, where you can actually they give you like a case problem and you have to pitch a solution. So the solution doesn't even have to work, right? It's just a presentation. You can do like a minimum viable product. That means basically you can do like a video to show how the so-called product will work, and you don't have to really make it work, but you can obviously use editing tricks and all to make it look like make it show how it will work. Let's say if this product is out, and these competitions are paying you like $10,000, $15,000, $20,000. Let's say if you win them, and some of them even fly you overseas, to take part in the regional contest, right? So literally, you get paid to travel, you get paid, to come up with solutions, and there's seriously no risk, right? The only risk is you go up, you present, and you maybe lose a bit of face, but you get better every single time, right? So what me and my team did was that over a span of 3 months in a semester, we actually took part in like I think 7 or 8 competitions, and we win 4. So the trick is once you win a competition, you just keep reusing the idea, just keep repurposing it because it's proven to work, right? I mean, why you want to change something that works? So use the same idea, and in that 3 months, we actually raised like $40,000, and we won a trip to Taiwan as well. So, I mean, if you're more like the geeky kind, that's something that you can consider trying out. Yeah. Okay, we see a lot of people joining, and thanks for coming. Yeah.
Thanks for joining us, guys.
Yeah, so for those who just joined, if you're wondering what's happening, so we're talking about money, we're talking about self-awareness, and we're talking about sales. So if you have any questions relating to this topic, right, just type them in the comment section below. I actually have this question from, okay, I can't remember his IG name, but I think you know who you are. So this person actually asked me, right, can I look into this company called CK Hutchison, right? So basically they are a conglomerate in the Hong Kong, listed in the Hong Kong stock market. And what they do is they do telecommunications, they do utilities and everything, right? So today I want to share with you this framework called the DIE framework, the DIE framework, right? So if you don't look at this framework, you will die. This is for people who are more serious into really wanting to look at individual stocks, right? So the number one thing that I look at is this thing called DIE. Okay, so you can see, right, I actually, oh no, it's opposite. So maybe I should
Opposite,
yeah. Okay, so you can see this framework, right? So this is D, right? So what is D? D is actually debt, right? So what I like to do is I like to look at how, okay, so for example, right, let me just give you an example. If today, right, I'm worth $1 and I have, let's say if I'm worth $1,000, right, I have $1,000. But if I owe the bank $500, I'll feel kind of uncomfortable because 50% of my 50% of my net worth is actually debt. Okay, so when we look into companies, right, we want to make sure that they are not overly leveraged, because the number one thing that kills a lot of business is not because they can't earn money, not because they have a sucky product, but it's because they have a lot of debt, right? So my criteria is that I want it to be lesser than 40%. Right, so you can see this is CK Hutchison. The debt to their worth is actually increasing over time, and lately their debt to worth is actually above 40%, right? And I think that's kind of uncomfortable for me, right? So as of all things, right, when we compare, right, we have to, how do we know if something is good, right? We have to compare with like the top companies in the world, right? So when I tell my members in my community, when you want to invest, you always have to increase your benchmark, right? So if you look at 100 companies, out of companies, you're buying 50 companies, that means your standards are not high enough, right? You look at 100 companies, only 5 companies should come into your radar, and you only swing your bet in this like 5 top companies, right? We want to buy the top businesses in the world, right? We don't just buy any other businesses, right? So I consider Visa one of the better companies in the industry, right? So you can take a look, right? Visa's debt to worth is always lesser than 40%, right? Never, in fact, in 2015, they have no debt at all, but then they took on a bit of debt to actually fuel some growth in their business, right? So when I compare CK Hutchison to Visa, right, obviously CK Hutchison doesn't pass the debt criteria, right? So the next one, unfortunately, because my printer was a little edgy today, so I couldn't print out I. So I is actually your inflow of cash, right? We always want a business to have cash coming in. So imagine, right, let me give you an analogy. If today, right, let's say Daryl, if today I tell you I'm earning $1 million every single year.
Yep.
Yeah, but when you look at my bank account, but you only see $1 in my bank account, do you think it's dubious or not?
Of course, yeah.
Yeah, it's dubious, right? So I mean, same goes for business, right? Some businesses, they can lie or fake their earnings to say, okay, I earn $1 million or $2 billion every year. But when you look at the amount of cash that's coming in, right? If it's not positive, right? If it's negative cash, that means something is wrong. Okay, so let's take a look at. Okay, I do not have the cash chart, but the cash chart looks okay. So both businesses, both Visa and CK Hutchison, they actually have a positive cash coming in. And the last thing I want to look at is E, right? D, I, and E. So when you look at E, right, basically this is the earnings of both businesses, right? So ideally, right, I want a company that is like Visa. Can you see Visa's earnings is what? Right, it's actually increasing, right?
Yep.
So this is the earnings of CK Hutchison. You can see that it dropped and it's kind of like stagnant, right, for the past since 2016. So when you look at this, right, I mean, it's very. Let me put it this way, right? I mean, some of you might disagree with me, but so I ask you, Daryl, do you want to date someone ideally? Do you want to date someone who's earning more and more money every single year?
Of course, lah. Right.
Of course, right? I mean, ideally, right? I mean, okay, lah. I mean, people will judge you for being materialistic, but I mean,
But it's okay.
it's good. I mean, it's a very good bonus. So,
Right.
so say for companies, right? When you buy into companies or when you buy into businesses, you want businesses to be earning more and more money every single year, right? So think about it, right? If I have a friend who if you have a friend who come to you, right? So for example, Daryl, I come to you and I say, hey, Daryl, do you want to buy do you want to be a business partner with me? Do you want to buy over some shares of my business, right?
Yep.
So Daryl, will you be concerned if, I'm going to earn more and more money every single year?
I will not be as concerned because you're growing.
Right, but you want to at least know that I can be growing my earnings, right? You want to see at least some track record that I've grown, right?
Yes, correct.
Yeah, I can't be coming to you, then actually my business not earning money yet. Will you invest in me?
No, of course not. I
Yeah.
get it.
All right, you get it, right? So,
Yeah.
So let me show you the chart again, right? So
DIE,
this is, DIE, right? So this is the earnings of Visa, right? And if you compare it to CK Hutchison, right, you can see that the earnings of CK Hutchison is actually kind of like stagnant for the past 3 to 4 years, all right? So for the person who asked me, would I take a look at CK Hutchison just by looking at the numbers? And you can see it's very, very simple, right? How you look at a stock is really how you look at if your friend were to ask you to buy his business, right? It's very, very intuitive, right? So I look at these 3 things and just looking at these 3 simple framework, right? DIE. If you don't look at it, you will die. Just remember DIE, right? If I don't look at DIE, right? I just look at DIE in 3 minutes, right? In 3 minutes or maybe 1 minute, I can know if this company is worth looking at or not, right? Why I took more than 3 minutes because I have to explain to you. But if I would just mentally look at it, maybe in 30 seconds, I can kind of tell, right, whether if this company is worth looking at. Yeah. So this is just a very quick framework that I always like to share with people, right? Let's say if anyone wants to ask me if a company is worth looking at or not.
Right. So I just received another question with regards to stocks again.
Okay.
I think it's a fantastic chance it's a fantastic chance for them to ask you actually.
Sure.
In terms of stocks, right, there's 2 types. Would you say, or maybe there's more, right?
Yeah.
There's growth and there's dividend stocks. What's your take on both of them? And is there a strategy in place or how does that work?
Okay, so actually it's very simple, right? Think about it, Daryl. You're talking about this flipping thing, right? You're talking about this flipping thing, right? So
yes,
you're saying that you're flipping, you're buying things at $15 and you're flipping at $30, right? I mean, let's keep the numbers simple about that. So your ROI is 100%, correct?
yes.
Yeah. So it's the same as companies, right? Let's say if you have a company, right, that's using $1 and they're generating 100% return on that $1, right? You will want that company not to pay you dividends. I mean, let's just maybe make it more, contextualize it to a personal example, right? So, Daryl, if you know that you can flip $1 with $1, that means you have 100% return, right?
Yeah.
Would you want to go on a holiday? Would you want to take out $4,000 from your business and go on a holiday? You know, take out the money, or would you flip it more?
Money in the business, right?
Yeah, or would you take the money, put it back in the business, and flip it more?
Definitely the second option.
Second option, right?
If I can grow, why not? Yeah.
Yeah, exactly. So when I buy into companies, right, I like to buy into growth companies that can grow really high and not pay me dividends. I hope they don't pay me dividends. And I know it sounds a bit strange and counterintuitive, but you know, if you think about it from a business perspective, like as a real business owner, if I know my business can generate 20% returns for me, right, why would I want the business to pay me out in terms of dividends? Because even if I get the dividends, I have to find another opportunity where I can flip my money at 20%, and that becomes a headache, right? So I would prefer them not to pay me dividends. And if they pay me dividends, I have to pay the US government 30% tax, right? So not only do I not get to flip my money at 20%, I have to pay tax to Uncle Sam, right? Uncle Sam is the US government, by the way. So, you know, just thinking tax-wise doesn't make sense. Thinking of it from a business owner perspective, right, of flipping money, it doesn't make sense at all for my company to pay me dividends. So for me, I would love to prefer to invest into growth companies first, because I mean, I'm in the phase of, you know, growing my capital to a certain size, right? So when people ask me what's my certain size, I'm talking about maybe $5 million, right? $5 million, that I think I've been very comfortable. I can be, you know, really just be very, very comfortable, you know, go two times a year, go holiday and whatever not, right? So when I hit that size, I will start looking at dividend companies, right? Because it's more of like a thing where I can, you know, pass on to my kids in the future, right? Let's say anything happens to me, my wife or my parents can actually live off the dividends that you know, that I'm receiving from these companies, right? So to keep it short, right? Early stage of your life, focus on growth companies, right? Nothing but growth. When you have a lump sum of money, consider dividend companies to get your steady stream of cash flow. Yeah. So that's the thing, right? If you compound your money at 10% and at 5%, so dividend companies, they usually only grow at about 5%, right? Growth companies, maybe you grow at 15 to 20%. That difference, right, in the growth rate, right, can cut short your financial freedom by up to 10 years, you know. So if you invest in companies that can grow 15, 20% versus 5%, you can actually shortcut your journey to achieving your financial freedom, right, by 10 years, almost there, around that. You can go and churn out your Excel calculators and everything. 10 years, you know. So, you know, I would rather delay that cash flows coming in, grow my capital, and be free 10 years earlier. Yeah, so that's my short answer to that.
Yeah. I think that's partially the reason why I bought into your entire program as well, because it really makes sense. It's super easy for me to understand. You see value in the company, it makes sense. The whole thing, if it won't corrupt or like go bankrupt, if let's say there's a time like crisis like virus.
Yeah.
Yeah, and it's scalable, right? The stuff that you taught us, like if it's a technology company, if it's like a pharmaceutical or whatever. So when you spend X amount of money on a certain medicine, then that's it. The fixed cost is more or less done. So all these things, as a newcomer, I can get it. I can apply it and with the guidance. And that's why I chose that growth investing is my thing. So there's so many different things, like Forex and this and that. So yeah, so it's so confusing and stuff like that. But personally, I just see that there's the most value in value investing, because you only believe you're building something that makes sense. You're part of that business that, you know, that's building something that is impacting others.
Yeah. I always like to tell people, right, when you buy something, right, you always want to understand what you're buying. I mean, it's very logical, right? I mean, when we buy phones, you know, we want to, you know, when people buy phones, right, they really understand what they're buying, or what the camera, how many megapixels, how many GB storage, can I download certain apps? You know, they really understand what they're buying. When people buy computers, right, they know how much RAM, they know how much GB and everything. So, but why when people buy stocks, they don't do this same amount of due diligence? Or when people buy insurance policies, they don't know what they're buying. So, you know, it's very, very strange, you know. So, if we can bring our natural way of buying things, you know, like just buying our normal things, right, to investing, or maybe insurance, or anything, right? Anything that you buy, or like any investment opportunities that your friend gives you, right? It has to make sense. If it doesn't make sense, that means, okay, so I think this is the number one thing that I always like to tell people, right? If someone gives you a pitch on an investment opportunity and you don't understand, right? It's not your fault they don't understand, right? It's not your fault. It's the person's fault. So don't feel dumb. Don't feel that you feel dumb, but rather it's the person's fault for not making it simple enough for you to understand. And chances are, if it's not simple to understand, it's something that's smoky, it's either a scam, or it's something that, you know, will not have a very good outcome, right? So really, sometimes it doesn't have to be so hard, you know, to really invest and make money profitably, right? All you need is patience, and you need the discipline, right? The discipline is the discipline to swing your bet or swing your money only when you understand. Because sometimes when we don't understand something, we feel dumb and we feel pressured to, you know, buy because, you know, whatever the salesperson is just so convincing or what. But we don't have to do that, right? Because ultimately it's our money and we have to say, right? So you don't have to feel dumb. Okay, so JYSJ, you said that bottom line to do your own research and see if it meets your criteria for investment. And you're absolutely right, right? Don't be pressured to do anything, right? So no one can kill your father or mother if you don't buy into anything, right? So, you know, you don't have to be stressed about it. And I think number one reason why most people lose money is because they do not dare to ask. And well, it's such a pity, right? Because sometimes all you have to do is just ask one person, and maybe that person has been there, done that, and he tells you, okay, avoid this because certain bad experience has happened. You could have easily avoided losing money, right? Not just in investing, but a lot of things in life also, right? Maybe learning something new, how to be the best, how to learn it fast enough, right? You want to learn from the best or someone who has already been there and done that. So it's all about asking, having the humility to ask. You know, it's okay to look down or feel down. I mean, everyone has to go through that process, you know, to attain mastery. To attain mastery, you at least have to become an idiot at least once or twice. You know, you don't get mastery by looking smart and being right every single time. It just doesn't happen. So, you know, it's funny how people are so scared of you know, failing or looking stupid. In fact, I always tell people, I'm happy if someone proves me wrong and I look like a complete idiot, because I'd rather look like a complete idiot than I lose all my money. So I'd rather be wrong so that I'll be right. It's a bit mind blowing.
I think that's something that something from my side I want to share as well. Humility, I think I did one post, you know, or a recent post. Humility was something that after doing the personality test, because this video, you know, this IG live, part of it is actually self-awareness that we want to share. You know, so it took, I mean, I teach self-awareness, so obviously I need to use it on myself again, you know. So it took me a lot of, I would say, courage to be aware that, hey, shit, humility was my lowest characteristics, which it's understandable because I've been sharing a lot of knowledge with my boys, right, my SCA team, and a lot of people who's asking me questions on DNYK. And I was very real with myself. I don't want to escape. I said, Daryl, when was the last time you actually learned something from someone? Or when did you actually look for mentorship again? Because the last time, I think the last one was with you, you know, which was last year, March or February. So there's a lot of complacency in place, and I was like, hey, I need to take myself out of that situation. So that's why for my followers, right, you'll see that the past few weeks, I've been meeting a lot of new faces, new people, going to seminars. Tell my friends that, hey, I want to learn because I want to build this dream of mine. I'm an idiot now. I don't know anything. I don't know how to create offer. I don't know how to teach people the unique sales strategy. But I'm learning, you know. But at the end of the day, my mission is there, and I'm here. How to get there? And people who are really genuinely kind or like believe in you, they will bring you there. So that was like my biggest takeaway the couple of days. It's okay to say that you suck, like what Jang has shared earlier. I rather people tell me, hey, you're dumb, but bring me to my dream. You get it, right? Rather than telling me, hey boy, you're actually smart, you're very good, and I cannot achieve my dream. So what's the point?
Yeah.
So it's a very valid point.
Yeah. I think one thing about I mean, talking about like, comments that people give, one thing that struck me a lot, I mean, I got this from Gary Vee, right? He says that
Right.
don't overvalue opinions, right? So he says that, if some people like praise him, he'll feel just okay. He won't feel like over the moon. So when the thing about overvalue, or what I call overvaluing opinions, is that when you get good opinions, you'll be really, really, really happy. But when the bad opinions come, you'll be pretty damn sad. Yeah. So
Yeah.
you really want to, just see opinions as okay, kind of like a feedback loop to tell you, okay, you're doing something right, and do not let that go over your head. I mean, you can be happy. I mean, we're all humans. Obviously, when we hear praises, we'll be happy. Just don't let it go over your head, and always have this humility to say that, I will stick to my principles. I'll continue adding value. I'll do whatever it takes, ethically and obviously in a good way that can impact people. And as long as that is done, I'm happy with what I'm doing. Yeah. So that happiness should come from within rather than coming from validation of others. Because if people don't give validation, then you're going to have a hell of a time. And most people in the world do not give really good validation. So, you don't want to really be like at a eternal state of misery, if you really overvalue opinions.
Yeah, so going back to that, right, vast majority of my students who come into my class, right, after telling me that, hey, my problem is procrastination, my problem is I know that I need to do this, but I don't know how to do it, self-doubt and all this bullshit, right? At the end of the day, the core of it is self-worthiness.
Right.
Right, and it's really that awareness to say that, oh yeah, my issue is this. And I know how to confront it. Really, you can be Googling solutions or 3 solutions to get over procrastination, but you still cannot do it. Really, because you're not fixing the core of the problem.
Right.
But whereas if let's say you were to dig so deep and have a conversation with yourself, right, and dig really deep, and instead of solving B and C, you solve A first, and that's where you see yourself having, like I would say, that growth or that transition to the next stage where you want to be. So like I shared earlier as well, like my money blueprint is wired wrongly somewhere, really. Previously as much as I was building small businesses like that, right, I was selling things unethically. Like I was just a sleazy salesman. And that kind of inflicted fear in my life, whereby I was like, oh, I make money that way means I harm someone's interest, or I was selfish in a nutshell. So somewhat, that's why I was wired, right, to always give the free stuff, and I don't dare to charge the amount that I'm worth. So it really takes a lot of self-awareness to say, hey, there is something that's wrong. Forgive yourself first, and you move forward. Then you will see that, hey, shit, there's a pattern. And this thing that, hello, ni hao. and there's this thing about this quote, right, that says, life will constantly give you the same damn lesson until you react differently. It's the same for stock market, I believe. If you react based on your emotion, fear, and this rate, and you sell. The next stock that is good, same thing goes, right? You will react again and you sell. You react again and sell. 5 years later, you say, hey, stock market is not for me. And you spread this wrong belief with the rest. Whereas if you were to solve the inner issue first, which is, when I go and invest in the stock market, I'm very clear. I got clarity. I'm not getting money from the stock market to boast or to validate my self-worth. So it's very different. Once your inner world, I feel, is calm and is peaceful, right, your external world will reflect that. And that's something that I really respect for Jang, because he's someone that I resonate with. He don't do flashy stuff, buy cars, even though he's decent, financially decent. Yeah, like a lot of things like that. So like I personally pick a mentor that I really want to mirror, I want to be. So you must look at who you take advices from, like personally. And that's something that I feel your internal world must be right, your external world will be okay. I'm not saying I'm perfect. I just shared with you that I struggled yesterday or 2 days ago. There's a lot of things that we need to uncover or discover about ourselves.
Yeah,
so
I mean, that's what I really like about you, right, Daryl? Like, I mean, obviously, you haven't reached from point A to point Z, but probably you're at point A, point F, you're at point F, and you're just helping people to come to point F to become better a better version of who they are today, right? So, that's all, that is what we are all doing here. And, for me, it just pains me to see people losing money by not having that knowledge, where it could just be as easy as the DIE framework, the DIE framework. So for those who just join us, I think I see 10x wallet. 10x. Okay, I see Lim 3107. Please watch the replay of the webinar, because we actually shared about this framework called the DIE framework. So in 3 minutes, you can really tell whether if a company that, let's say your friend or anyone who asks you to invest, will be a good company. Yeah. Any more questions on your side?
I think let's pick one last question, right?
Okay.
Okay, we have one. So,
okay.
What's the top 3 companies or like top 3 industries, right?
Okay.
Yeah, that you think that has a good chance to grow in this, this state, this current phase?
Right, I knew that was going to come.
Yeah.
Okay. Okay. Number one, I think tech companies, because I would say the age group that we are having in this group right now, or the people who are going to watch, use. So I think it will be very easy to understand. And the beauty about tech companies is that it's not like your brick and mortar companies. What I mean by brick and mortar, so I would consider a factory, maybe a manufacturing company, as a brick and mortar company. So what I mean by that, so can you imagine if you have a factory that's producing, let's say, leather shoes, right? So for you to earn more money, what you got to do?
Produce more leather shoes.
Yeah, you got to sell, you got to produce more leather shoes. And how to do that? You have to buy machines, you have to hire more people, right? So every time you want to earn more money, your costs will also go up together, right? So let's compare this with a tech company, for example, like Microsoft. I believe there's a lot of tech companies, just that I don't want to say a lot of companies that probably for a layman person you might not know yet. So I think Microsoft, everyone knows it. So let me ask you, Daryl, let's say if a company like Microsoft wants to sell an additional license, let's say to someone from Africa, right? Do they need to hire more people, or set up buy more machines?
Yeah, initial fee is already done up.
Right, so the cost of the servers, everything, even the initial software engineers that developed it, they probably are not. You don't need additional software engineers to do it, because the product's already done, right? So in the case of Microsoft, right, your revenue is going up, but your cost remains relatively constant, right? So that is how these companies can scale really well. And I always like to tell people, right, for the companies that we buy, we want to have as little human interaction as possible. So if a company needs to scale by hiring more people, right, that is not scaling. That is just growing in a very manual way. But if you really want to scale really well in today's world, right, you have to be able to have this ability to sell more, but without hiring more people. You need to have more systems and automations. So tech companies like Microsoft. So I'm going to throw out some names, right? It's going to be a bit foreign, but you guys just take a look at it, right? So we have really software as a service companies like Salesforce. You have a lot of upcoming ones like Alteryx, Alteryx. By the way, these are not recommendations because obviously I don't have a license or what. I mean, I'm just sharing with you what I'm looking at. I haven't made a purchase or anything, just a disclaimer. And these are all for educational purposes. And so these software companies, I also really like companies that are in the fintech area. So for example, like Daryl, do you have a Master and Visa card?
Yes, definitely.
Yeah, I think okay. So people in the chat right now, if you have a Master or Visa card, just say yes, right? So most of you likely have a Master and Visa card, and they are such a excellent company, right? They just set up the whole infrastructure, right? They link up all the banks in the world, and any transaction that's been made, they will just take a cut out of it, right? So no matter if recession comes or not, they'll still be earning money because people still need to spend money, right? People still need to swipe their cards and everything. Maybe during that year, they'll just earn lesser money, but they will not go bankrupt, right? They'll still be a dominant player in the world. So, I think these fintech players, like the huge ones, they're going to do very well. They're still going to continue doing very well. The third one will be in the advertising world. So you have really great companies like Google and Facebook, right? Really no brainer, right? If you were to talk to a marketer, right, or you're in the industry of advertising and marketing, you will know that other than Google and Facebook, there's nowhere where you can really get very targeted advertising. So what do I mean by that? Traditionally, right, for example, if I'm a pet, if I'm a pet business and I sell pet equipment and pets, right, what I'll do is I'll pay tons of money, right, to appear on television to a whole range of audience that I don't even know if they're interested in pets or not. Right, so I'll be losing a lot of money. There's a lot of wastage in money because, what if during that period of time when I play my advertisement, I don't even have anyone who likes pet that's watching it, right? So what Facebook does is because of all the data it has, how you post, are you a very vulgar person or are you a very loving person? I think Facebook has all these algorithms to kind of classify you as a person. Or let's say if you are in a pet group, Facebook will surely know that you're a pet owner, or you have a lot of pictures of dogs in whatever pictures that you post, then likely highly chances you're a pet owner, right? So what Facebook will do, I mean, if I have a pet owner business, I will definitely advertise on Facebook because I know Facebook is going to only target people who are interested in the pet equipment, into pets, right? So I save a lot of money there. I save a ton of money, right? Same goes for Google, right? Whatever you search on Google Chrome, everything, Google knows, right? In fact, a lot of people, they are flaming on Facebook for privacy data infringement. But actually, do you know Google has even more data than you have, right? They know where you're going. You know when you key in Google Maps, they can see where you are, right? Whatever you key in, you search for naughty stuff on Google Chrome, on Google Incognito. Don't think Google doesn't know. Google knows everything, right? So, these two companies, I think they'll do really well. And I like to say that Facebook and Google, they are flying giants. Right? Look at Google, they are, I can't remember how big they are, probably in the range of 400 to $700 billion company. Can you imagine that such a big company can still grow at 10 to 20% every single year? Most small businesses are struggling to even grow 10 to 20%, but Google, a freaking few $100 billion company, can grow at 10 to 20%. So this is what we call flying elephants, right? This is what we call flying elephants. And if you really want to be very safe, you want to do better than S&P 500, you can consider looking at Google, right? Facebook as well, right? So Facebook is a really very classic case, right? I feel that even though you have all these scandals and everything, even Google can't be as targeted as Facebook, right? Google is not as targeted because Facebook, you have WhatsApp, you have Instagram, you have your Facebook platform. So pretty much, I think on all of your phones, you probably have these three apps: Facebook, WhatsApp, Instagram. Yeah. So I think that Facebook is going to be the next thing. And recently, they actually have this like VR goggles where they want to develop this VR reality, right? So I don't know how many of you actually play Club Penguin or Habbo Hotel. So it's kind of like a VR world. Correct. It's like Ready Player One, So you can actually go inside and interact. So who knows, right? I mean, in the VR world, people can actually put like billboards and advertise in the VR world itself. And Facebook earns money, from freaking digital advertising. They don't need to own a space, right? They just put pixels or advertisement and they earn money. Yeah, so check out this thing called Oculus, OCCULUS. Yeah, so this is what, I mean, a friend actually let me try Oculus and I thought, wow, it's crazy, because it feels so real. You can be in a one room flat, but you put on your goggles, you get a view of like your whole virtual bungalow, your high ceiling. Wow, it really feels very different instantly when you put on the VR goggles. So I think that's probably one place that Facebook and Google will be doing, right? I mean, I spoke a lot, but I mean, let me just put it into three main points, right? So I talk about the digital advertising companies. I talk about the fintech companies like Master and Visa. I talk about companies that do software as a service like Microsoft, right? So obviously Microsoft, Salesforce, a lot of companies are going into as a service platform nowadays. Yeah. So these are the three industries that I'll look closely on because I think it's the easiest for millennials to actually understand, and it's one of the most easier. It's one of those superior business model where you can scale easily. Yeah.
Once again, thank you so much for giving value to the
Wow.
audience.
We
Yeah,
covered a lot,
initially,
man. Yeah.
Yeah, we initially wanted to do a 30 minutes, right? And extended to an hour. Wow.
Yeah.
Time flies.
I think maybe people are all very hungry at eating lunch. So
Yeah,
probably we have a lot of people coming in, but they do not have time to stay. So let's
yeah.
say if you want this session, right? You want another session. Let us know what is a timing that you can really fully commit without being very disruptive to your calendar.
Yeah.
So that's one. And whatever you have learned, just tag us on Instagram and put your top 3 learnings today, right? Put your top 3 learnings today, tag us on Instagram and share it with your friends, because I think at the heart of what we do, me and Daryl, we really want to outreach to more people, to actually help more people to either generate income, right, to through sales, right, to become more self-aware, become a better person, right, be aware when on times where you're reactive, to become a better person. And obviously for my part is to really stop losing money because you are not financially educated, right, and to even maybe plan for a day where you can really retire. Yeah. So 2 things, right? Let us know what is a day and time that is the most suitable for you guys. And the second one, post your top 3 learnings and tag us so that we can spread the love and spread the message to more people.
Yes. Thank you guys so much for coming in.
All right. Thank you
See you
guys. Have a good lunch.
Have a good day. Yeah, bye.
Bye. Cheers. Thanks, Daryl.
Bye. Thank you.